Hey, Kevin here, top 1 financial advisor and best-selling author, and we are here to talk about the stock market. It was an interesting day. Some things happened in the market. Netflix announced earnings. It didn't go well. Peloton had some news. It didn't go well. And the entire stock market started off fine. It got out of bed. Stuff was good. And then it also went the exact same way Peloton and Netflix did. So let's talk a little bit about what went on and what you need to know as an investor, but more importantly, how to tell and how to understand what is on sale and what you just should not touch at all. Because on days like this, I don't know what's going to happen tomorrow, which when I'm DCAing anyway, but there's some people say, oh my God, the stock market is on sale. These companies are on sale today. Go and get you some. That is not the case for every company, and we can take a look at a company like Peloton. Let's do a brief history, okay? So Peloton went public, if my memory serves me correctly, went public on September 26, 2019. Then, as you know, the pandemic hit in 2020. Peloton absolutely took off. It was up 395% in the year 2020, and then in 2021, just like I be telling y'all, right? What worked last year doesn't always work the next year. The company was down 75% in 2021 for a bunch of different reasons. Lack of demand being one of those, lawsuits and some other shady things, but it was down 75% end of the day. Today they came out and said, look, demand is so bad, we're gonna have to halt production on some stuff. We don't have enough people buying our stuff. And stock responded and fell. When I looked at it today, it fell another 15%. So you're up 395, almost 400%. Then you're down 75, and then you're down another 15 today. That ain't on sale. That's not something I'm touching. That is a fall off the cliff. On sale is, oh, I tripped, I caught myself, and now I'm still walking. This ain't that. And the way the market is moving in terms of moving more to defensive stocks, moving more to those consumer staples and real estate and stuff like that, outside of all of that, the market is moving to go to places that you have to have anyway. I think that is the most important thing that you need to realize. If it's something that you have to have, then it makes sense to invest in it, and it makes sense that it would be on sale. Everything else, if it's not in that category, it might not be on sale. Okay, that's how I want you to look at it. So for example, do I need a Peloton? No. Great if I have it, but I don't really need it. Do I need groceries? Costco, Kroger, Walmart, even if you want to go there, those might make sense. Real estate investment trusts, we did a whole list on those might make sense. Regardless of what happens, if I have to stay in an apartment and that's where I have to live, MAA, the ticker symbol there for that REIT, might make sense. If I am still believing in the metaverse, I'm looking for something long term, Nvidia, that one might be on sale. It was at 300 and some, I want to say 317 was the most recent high if I remember correctly. It is well below that. Nvidia long term has worked out quite well. That might make sense. That one might be on sale. You got to really look at that, because if we see, everybody's been talking about the metaverse, everybody's been talking about how supply chains and ramping up production for Ford and GM and Tesla. Guess who makes all of those chips, right? That might make sense. That company might be on sale. So you really have to take a look and say, what's on sale and what are the areas of the stock market and areas of the economy that you have to go through if things are going to improve. Because the theory here is inflation is high because not everybody, but most people are going back to work and the economy is growing a little too hot. So you have to slow things down. So what parts of the market have to be here? What parts of the market can we not get out of? And some of these we've already talked about. So we talked about REITs, we've talked about financials, and I know some people feel a certain way about financials and whether banks are needed, which they are, but those are you got to have a bank, right? And if interest rates go up, you kind of stuck there, right? I gotta get food and groceries. So whether it's Kroger or Costco or Walmart or maybe even a Target, you gotta go there, right? Those things can't, I won't say they can't crash, it certainly can, but you gotta go somewhere, right? The money's got to get spent somewhere, and in these cases, these are some of the places where it's gonna be. I really like the concept of a lot of the rental property REITs because whatever's going on, rates going up, inflation going up, rent going up, I gotta live, right? So those apartment REITs are going to get their money, and those are some of the easiest to understand outside of like a grocery store. So yes, those names might be on sale. I told y'all when I was gonna get into Kroger, and I'm doing something that's, you know, somewhat short term. It's not a super long term thing I'm trying to do, but when it came down to about $47, that's when I decided to pick it up. And the way that I'm approaching this, and I would implore you to do something similar with what fits with your goals, is that this is not a time to be a short-term investor in my view, because the market is doing all types of crazy stuff. For example, Netflix dropped 15%. Well, it could be worse by the time you're watching this video. I think between 15 and 17% dip because of competition, which we talked about. We did talk about Disney Plus and all these others kind of crowding that space, and Netflix fell as a result of that. But in either case, I'm really trying to park my money in a few companies. They pay dividends, that's even better for me. I'm just kind of sitting here and waiting things out. Other than my DCA, which I'm going to do tomorrow anyway, that is the approach you might want to take. If you see a good company, keyword a good company that you know has done well for the long term, that's what you want to do. That is my take on it. It is not on sale if they haven't been around for at least 10 years. So that's controversial for some people, but I'm going to tell you the truth now, okay? Like, a lot of these IPOs that just came out in 2019, just came out in 2018, they haven't seen an environment like this. Many new investors definitely haven't seen an environment like this. I can look back 20 years and tell you how well Apple has done. If Apple has come down a bit, that's on sale. Apple is going to be here. I can't tell you if Peloton is going to be here. I don't know, right? I cannot tell you that. I've seen Costco, they done been here. Microsoft, they done been here before. So if those names come down, that makes sense. But this is your opportunity right now to separate that and see what is on sale, what makes sense, what has been here, what is going to continue to be here, and what is not. Some of these things we've talked about before. We talked about the REITs. Obviously, I think that makes sense. We talked about financials. Obviously, that makes sense. We talked about some ETFs. If you're doing index fund, obviously, those make sense. But again, you want to be careful between saying what's on sale and what's not. Some things are an absolute trap. Peloton being one of those. Okay, so you want to be very careful in avoiding the traps, the things that haven't been here, haven't been around long enough to know how to act in a moment like this, and move towards the things, or at least have enough things that we know is going to be here. So if you're wondering, like, what are those things, go back and watch the REIT video, go back and watch some of the videos we had talked about for some of the metaverse stocks if you want. I think Shopify did quite well today, even though Shopify is a little new. And then go back to your core, right? The Apple, Microsoft, I don't really know about Amazon right now, but you know, for the majority of those, Microsoft, Amazon, Google, stuff like that you know is going to be here, this might be the time to say, look, oh, it came down a little bit, let me move some more in here, let me DCA some more here as it's starting to come down, and focus on the long term. This is where long-term investors really win out. People trying to get in, make some money real quick, they get in, it drops, and it drops some more, and they get out, they take their losses, and they go somewhere else. Long-term investors say, oh, look, I was going to buy this anyway. I know it's been here. I see when the market is moving. I'm going to buy this. I'm going to hold on. I'm going to check back a year from now. I'm going to check back 6 months from now, and they see those profits. This is that opportunity, because the only way, or the best way rather, to win in October of 2022. The best way to win in June of 2022 is to get you some deals now, is to get you some quality companies now and let things ride out, because it is way too unpredictable in the short term to see where things are going. All right, so that is my take on what's on sale and what's not on sale and how you should approach it, because not every dip is the same. Not every dip is the same. So you want to take your time and like really separate what makes sense and what doesn't make sense. I don't know your portfolio, so I can't tell you exactly. But those are my thoughts and how I'm looking at it. You'll see me make my moves tomorrow, and I do want to do a grade your portfolio episode. We'll try and get that out as soon as we can, either tomorrow or next week. Depends on what happens tomorrow. We'll see you on Friday. All right, that's it for me. I'll talk to you guys later.